Shivakumar, I know your company doesn't focus on inland, waterway-based business model, but since you are from that industry, what kind of opportunities do you see opening up here as water as a mode of transport for Indian corporates, especially goods transport, opens up?
Yeah, good afternoon and thank you for having me. This is indeed an interesting topic for discussion. Leave aside inland waterways. Let me just talk about the coastal transportation itself of goods. Uh, Transport by sea is the most efficient mode of transportation. Uh, it does not get stuck in the bottlenecks which sometimes you can have with road or rail. It is also much more uh, fuel and carbon efficient than road. And we have maintained this for a long time. I think when we are looking at a port-based development, and if we have much more water transportation by ship, it will be good for the economy. It will be good for the environment if we replace a lot of the road transport with transport by ship. It is indeed a very efficient mode of transport, also for transporting large volumes of goods at a time.
Now that we have set the context in terms of the overall industry, I wanted to narrow down the conversation to your specific numbers as well, Mr. Shivakumar, because it was a very stellar set that you posted in the quarter gone by. The offshore segment had turned profitable, and a lot of your vessels are coming up for repricing as well, right? Talk to me about what kind of uptick do you expect in pricing, and hence what could be the impact on the margins, etc.
Yeah, yes, indeed, a lot of our offshore vessels are coming up for repricing. And because of the way the market has moved, the market went through a bad patch from 2015 all the way up to 21. All of these are typically 3-year contracts that these vessels are currently running on, and those are coming up for repricing. They have been bid into tenders. Some of those tenders have opened. We are seeing, based on recent pricing, and the tenders have opened, but they have not been awarded. But based on recent contract awards, we are seeing on average $3,000 to $4,000 a day higher rates than their earlier contracts. And remember, in these cases, that the uh, the cost base remains more or less the same. It doesn't change with the rates that the vessels earn, and therefore this goes straight to the bottom line, from the top line to the bottom line. And the market is showing very significant improvement from where it was 3 years ago when the last pricing was done for these assets.
Shivakumar, you had built an inventory in the lean time. I remember since till 2001, you had stocked up on assets which are now you're deploying, of course, and we understand there is a big supply-demand mismatch. This due to which, of course, you're seeing higher rates as well to a certain extent. I want to understand next 2 to 3 years, which fiscal 25, 26, or 27 would you capture highest repricing of those 3-year rolling contracts which you're talking about, which are actually happening at a higher rate now?
Yes, just to put it in perspective, so the offshore business, specifically, since we are talking about offshore, I assume that's what you're referring to. The offshore business had a great market all the way up to 2015. Then it had a very lean patch, which was up to 2021, 22. And now it is turning around. Uh, as I mentioned, the rates are significantly higher than they were in 21, 22. And therefore, the business has come back to profitability. But it has not yet come back to the levels of profitability that we saw 10 years ago. The rates are still nowhere near where they were 10 years ago. They were still significantly higher than the current, the most recent repricings. So there is room, and they have been higher. We don't know if the market will go higher also from here. But offshore is still not reached its earlier peak in terms of profitability. At the peak year, they made the equivalent of $100 million in profit. This was about 10 years ago. And they are nowhere near the earning numbers of that time.
Fair enough, but it's a fairly cyclical business, so you have to go through all of those cycles. I wanted to specifically now talk about the dry bulk segment because one of these days there was that big, sharp change in the Baltic dry index prices as well globally. How are the prices right now, and what's been the order visibility? Because I think Brazil is going through its own issues in terms of the various geopolitical action which is happening there. What's the pipeline looking like for dry bulk as well?
So in dry bulk, yes, last week there was one day which had a significant increase in the Baltic dry index. But these are again positional things. Suddenly somebody gets short on the market, they need a ship, and then you have to pay the whatever the price is to get a ship on that day. And the spot market index goes up and down, and one shouldn't pay too much attention to that. The broad trend is that the market is firm, not just for the large ships, which is the Cape sizes, but also for the smaller ships, which is the Kamsarmaxes and Supramaxes. So the trend is of strength. The Chinese imports have been strong. Brazilian exports of iron ore were strong in the last quarter. And let's see how it goes in future. But the market for now and the forward pricing, which is in the market, not necessarily that we are locking in at that pricing. The forward pricing also seems quite positive on the outlook for the dry bulk market.
Just announced sale of one of your, tankers as well, the medium-range product tanker, Jag Pranam. Could you talk to us about what kind of valuations, etc. you have garnered? Because I'm assuming that right now it's the peak of the cycle with respect to the sale of these assets, etc. What's the pricing? And secondly, do you have any more in the pipeline in terms of any more sale or buying of any of the assets?
So first, we have confidentiality clauses, so we don't give the pricing of the ships. But you're absolutely right. We are at a high part of the cycle. The prices for tankers are at their highest level since 2008. So we have sold this vessel, which will be 20 years old soon. What we've also done, and this is part of our fleet modernization program, we had recently bought and taken delivery of two slightly younger medium-range product tankers in the last month. And we have sold two of our oldest product tankers. So this is part of the fleet modernization. While we are not very comfortable investing large sums of money at this point in the cycle, in order to keep our market position, we are just modernizing our fleet on the margin. We are always looking at transactions to whether we need to buy or sell, and depending on the values that we get. So, as I said, this is while we have a lot of financial resources to do a significant amount of capex, we are only doing this incremental modernization of the fleet.
Okay.
We're not going out and doing a large amount of investment.
Fair. So it's not a capex drive per se, it's still modernization. Thank you, sir, for making time and speaking with us and talking to us about a whole host of issues and the fundamentals of the business. But
if you like this video, then like, share and subscribe to ET Now.